Let's bring in former Fed Governor Wayne Angell. We also have former Dallas Fed President Bob McTeer, Brian Westbury of First Trust, Peter Schiff of Euro Pacific Capital, Steve Leisman and Rick Santelli are still with us. I have a feeling they will kibitz as well. Wayne Angell, at the beginning of the day, from what I gathered, you wanted to see the Fed keep their target rate at 1%. Then they took this shock and awe action, which opens up a trading range of 0 to 0.25%, and Katie barred the door for balance sheet expansion. Now I hear you favor the Fed. You've swung from one end to the other in a mere one day. What's up with that, Wayne? Why have you changed your mind?
Well, I changed my mind because the Fed finally got its act together and is focusing on what it needs to focus on. That is, when you see 30-year debentures of Fannie Mae trading at 3.86%, and you see the prime rate coming down, then you've got the Fed out there focusing and working in a way that is going to help turn around this housing deflation
Wayne
period.
Angell, you used to be the single biggest inflation hawk in the history of America, for heaven's sakes. You were a commodity price rule watcher. Gold, CRB, grains, metals. Now, I know commodities have had a nasty plunge, as has gold. But what we're seeing in the last couple of weeks, in advance of this Fed shock and awe, is a rebound. Commodities are up, gold is up, and the dollar, which have been improving for many, many months in the spring and summer, is now tanking. It took Rick Santelli's breath away after the Fed announcement to see how much the euro rallied against the dollar. Wayne, these are your own disciplines turning against you. Why are you still defending the Fed?
Well, because you're misreading them, Larry. We've got core commodity prices, and we've got overall commodity prices are still down 27% year over year.
All right.
That doesn't change. So we've got headline inflation numbers reported this morning at 1.1%. I mean, that's a marvelous headline number.
I agree. Let me go to Peter Schiff. Peter Schiff, your thoughts on Wayne Angell's analysis, and more generally, your thoughts on Mr. Bernanke's shock and awe today, Peter.
Well, Wayne couldn't be more wrong in his analysis. I mean, first of all, Ben Bernanke is actually gaining some ground on Alan Greenspan in the race for who can be the worst Fed chairman ever. You know, you're not going to revive the economy by creating inflation. You're going to kill the economy. You know, the fact that commodity prices have come down, that's a temporary factor associated with deleveraging. Consumer prices have come down a bit because you got a lot of going out of business sales. You got a lot of inventory being liquidated. But the inflationary pressures are building, and they're building fast. The dollar is dropping like a stone. By next year, you're going to see commodity prices going through the roof again, consumer prices going up, and this inflation genie is going to be so far out of the bottle, there's going to be no way the Fed can rein it back in.
Hang on, Pete. I got two more voices to get through real fast. Bob McTeer. All right, you heard Peter Schiff, and you heard Wayne Angell. Who was right in your judgment, Mr. McTeer?
Wayne Angell was right.
Why? I thought you wanted the Fed to hold at 1%. That was the report I had. You guys flip-flopped during the course of the day. Why is this?
Let me explain. When I thought that the Fed funds rate would be the only game in town, I didn't see the point. But when they packaged it up with all the rest of that, it became a beautiful package.
What, buying everything that moves?
Necessary.
The Fed's going to buy everything that moves, right? Mortgages, consumers, treasury bonds.
Nobody else is.
We used to say if it moves, tax it. If it moves, regulate it. Now you're saying if it moves, the Fed should buy it.
If it moves, buy it. Nobody else is buying.
Bro, we can just print prosperity. That's fantastic. Nobody needs to work anymore. Why don't we share this invention with the rest of the world?
Brian Westbury,
all we got to do is print money.
Wide field to discuss here, and we got to have you come back after this. But go ahead, Brian. Weigh in. You've heard Wayne. Right. You've heard Bob McTeer. Right. You've heard Peter Schiff. You've heard Rick Santelli. You've heard Bruce Leisman. You've heard Steve Leisman. And you've also heard Ben Bernanke. Who's right and who's wrong?
Well, I mean, that's a long list. Let me just put it this way, and that is that the real problem we have is not with the borrower. There's plenty of borrowers that want to borrow money. It's with lenders, and it's very, very difficult for people to lend money when interest rates are so low and risks are so high. So I'd never have figured out how we can cut interest rates and make lenders happier about lending. That's not going to help the economy.
You know, sometimes, Brian Westbury, when I think about this, I lean back and I close my eyes and I just try to meditate and cogitate on what we have: a zero interest rate from the central bank and an unlimited expansion of the balance sheet, which they pledged today to expand even more. It has a certain Latin American feel to it, Brian.
Absolutely.
It does. But, you know, we tried this back in 2003 and 2004 when interest rates were 1%. And if you remember, we were going to hold rates down for a considerable period, and that was all designed to get mortgage rates down. And what we ended up with is a housing bubble. And so I'm not quite sure why we're trying to follow the same policies that got us into the housing bubble in the first place. It doesn't make sense.
We got to get out. Stay right where you are.
We're now officially a banana republic.
Right where you are, please. We got much more work to do. CNBC Report's coming right back after this. This is a controversial topic. I don't want to be the Grinch to steal Christmas, but I have my doubts about today's Fed. Very much, Adam. We're back with Wayne Angel, Bob McTeer, Brian Westbury, Peter Schiff, and waiting in the wings, Steve Leisman and Rick Santelli. Mr. Santelli today gasped on the trading floor as the dollar hemorrhaged against the euro as the Fed came in with its most dramatic pump priming probably since, I don't know when, the middle 1930s. Anyway, Peter, I want to go to you, Peter Schiff. You used to have a saying in the trading room of a big firm I used to work for. I might add that firm is no longer in business. This was many years ago. I used to call it palm trees growing on the trading floor as the Fed was pumping out large quantities of money. And, Peter, I want you to respond to this because I want to ask Wayne Angel and I want to ask Bob McTeer when the last time they went to Argentina, because that subject interests me a lot. Meanwhile, on the full screen, we're going to put the Fed's balance sheet, Reserve Bank credit, we're going to put the monetary base, and we're going to put M1, just to let people see the degree to which we have expanded the money side. Just throw it up there. Reserve Bank credit's over 100%. Monetary base is, I think, even on a smooth basis, about 45%. And M1 and M2 are both growing about 8%. Peter Schiff, where is this going to lead? Where? We're going to get economic recovery?
No.
Are people going to buy mortgages? What happens,
It's going to lead to disaster. No, you're right to bring up Argentina. A lot of people bring up the example of Japan. We're not going to follow in Japan's footsteps. They're a wealthy creditor nation. They have a high savings rate. They had a trade surplus. We're going to follow in the footsteps of Argentina. So if you want to look at America's future, go look at Argentina's past. This is what is going to happen. You know, all we're doing is creating money. Asset bubbles have burst. Real estate prices have to fall. Companies have to fail. This phony service sector economy has to be allowed to unwind. We have to let the free market function. If the government simply tries to manufacture savings out of thin air and get people to go deeper into debt to buy more products that we can't afford, they're going to destroy our currency. Look at that chart of the dollar.
Peter, why do you think that the distinguished, very distinguished Bob McTeer and the very distinguished Wayne Angel don't agree with you? Where's the disagreement?
Look, they've been wrong for years. You know, they didn't see this train wreck happening. It was right in their face. You know, I've seen this disaster. I wrote a book about the coming economic collapse. So they haven't understood these dynamics.
Let me get a response. Let me get a response. Wayne Angel, please respond to Peter Schiff.
Well, that's just sheer nonsense. The fact of the matter is that we are not in 2002, but we in 2008, moving into 2009, we are in a serious global falling commodity price movement.
No, we're not.
And the Fed, well, we are, and the Fed is taking